Good afternoon. Welcome to Options Tender. It is a new month, new week, new day trading. Welcome, everybody. Hope you all had a great weekend. I sure did. I was down in Nashville, Tennessee, having a great old time. Didn't realize it was such a party city. We went down for CrimeCon for my wife, but that's enough of me. If you're new here, go down to that bottom right-hand corner, hit that Options Tender logo. Today, we're going to go through SPY, not SPX. Let's do that. And then we're going to go from the monthly, since we're starting off a fresh new month, down to the 65. And we had a request for TLT. So I'm going to take a quick look at TLT, but I'm also going to post the videos that I did for TNX. That's the inverse. That's the 10-year. TLT is the 20-year bond, treasury bonds. So TNX is kind of the same gist of my storyline or fundamentals of what I think is going to happen. And so I'll post those two videos up that I did, and this will kind of complement those. All right, so let's jump into it. Don't forget to like the videos, and also please help support the channel. Become a patron, $3 a month. We have SPY on the monthly time frame from the 2000 wedge top here. The trend line didn't quite touch that yet. We're looking to see if we can get that coming up soon here. We're bullish. We have a monthly candle that I wouldn't call it quite an engulfing candle, but it was definitely bullish over the month previous. We had a nice correction there, and we're holding that 8 EMA, the trend indicator that we use on this channel, to let us know that we're in an uptrend. On the monthly time frame, on all time frames, that's what I use, the 8 EMA. So on the monthly time frame, we're still in an uptrend. Eventually, yes, I talked about this many times. This is the breakout area. I do think we test that perhaps after we get the trend line up top first. Let's go down to the weekly. And again, I'm not going to continue to harp on my different oscillators and things like that. It's all fine and dandy to keep looking at them, but I'll just show you the one. They're all the same. They all had negative divergence. We finally got it on the weekly time frame. We had it on the monthly. We have it on the weekly. We're looking on the daily to have it again. So we're looking for another daily negative divergence once again. So digging in a little bit deeper, we had this nice doji candle, bullish candle, or perhaps hangman if we get follow through underneath it. Right now, we would consider this a sideways price action. So we're pulling back right away. We're still above that 8 EMA. The trend is still up. So maybe we shop around sideways and then have an up move, or perhaps we're just pulling back before the move higher. Okay, still an uptrend, still looking good. Let's go to the daily. Daily trend is our friend. Get on that daily screen. Okay, so we have this large wedge that we're filling out. I do believe we're going to fill out that wedge just a little bit higher after we get to our wedge top. That's looking around somewhere around the 543. We've been talking about 540 to 545, a confluence up there, and I think that we're going to grind our way to that side. The time frame we're looking for, we're kind of basing off the FOMC. FOMC, we don't have to be at the target. We could be just below it, and that would say, hey, we have some unfinished business. FOMC, we go rip higher and then get our reversal. That's a possibility of many. But I do think we're looking for that target. Is this correction over? I don't know. Maybe we have one more low here. Maybe we test the lows one more time to test this trend line. But we're going to look on lower time frames and kind of say, well, not so fast. Maybe we're just getting our typical wave 2 pullback, which is fairly deep in most instances. So at this point, we had a nice 3-wave pullback, and let's see if we can hold these levels around 524. Let's see where we close off of here. That will be pretty telling what type of close we had. This is the former all-time high. Let's see if we can hold that. going down to the 65. On the, well, you know what? We're getting all kinds of new people here on the channel. So let me just show you what we're looking at. We're looking at a possible ending diagonal where we have a 3-wave move for 1, 3-wave move down for 2, 3-wave 3, 3-wave for 4, and we're looking for a 3-wave move up for wave 5. Our ultimate target is possibly 560 area. Does it have to make it there? No, our next target that we're really looking for is the 546 area. So 545, like I said, the 540 to 545, it's a zone. Let's dig into here, see if this is, we might have the end of this pullback with this low here. We'll see how we have to close today. We have, they would call this a cloud, something like a cloud cover candle or something like dark cloud cover. That's, you know, a possible reversal candle. But we'll see again, we're in a bullish stance, so we'll see how this ends up. Now, time relationship. We already had this one. I'm going to erase it. It's in the past. The next time relationship on the daily time frame is around 612. You see the 612. We have a couple more after that, but 612 just happens to be FOMC. So we'll kind of highlight that just to keep a reminder that look out. So that's FOMC right there. And so going into FOMC, like I said, it doesn't have to, we don't have to get a top on FOMC. It's just a catalyst. So that catalyst can move us into this top area. Maybe we top on 617 or 621. Maybe we have just a little bit more time to the upside and the FOMC is a continuation. And then we start, you know, moving down from there, or we continue to even. We'll check things out as we go. Maybe we even get on top of, this 545, 546 zone. We get on top of it and hold it. Then I think we go further. I think that's the point where we really start to get our 560 final target. Now, if we break above it and then break back below, that would be a fake break. And maybe we continue to test highs again and again. And we look for higher points there. Okay, it doesn't have to, we don't have to get to this target up top. Don't think, but we're in this bullish mind frame, right? So we want to make sure that we're trading with the trend. And if we look at the daily time frame, maybe we just fill this out to that 545, 546, wherever, right in this confluence, and we head lower. Now, after we break down, when and if we eventually break down from this wedge, do we just hold support and then hit our ultimate target? That's always a possibility. Or, you know, that's a sell signal. Maybe we just back test and then head lower. So that's why I do these videos so often. We want to teach, we want to show the possibilities, and we have to be ready as traders. If price does this, then we do this. Now we're going to go to the 65. We'll start off with a traditional technical analysis. And again, this is our wedge that we're filling out. We held the wedge, didn't quite get to it, but you know, neither here nor there. You're going to see people move the wedge line up to show, you know, that it came down to there. We don't have to. So what we're kind of looking at now, we have a 3-wave corrective move, and then we have an impulse move going into Friday. We're correcting today. And so let's take a measurement. We do have an expected move at the end of the week for 534. It's likely that we hit one of these expected moves. The other one is down below. Do we tag this one? If we don't tag this one, I think it's more likely then we start to spring to the upside. We have plenty of catalysts this week. Just about every single day we have something before the open or near the open. So just be careful of that. I do think we're holding. We're just back testing. So let's bring over the Elliott wave situation. And also, I know I'm clicking back and forth, but I'm trying to put these time relationships. We got that time relationship on Friday, the 31st, and just looked like we were going to crash. And we had this capitulation and just a rip to the outside in the last hour. It was a fantastic move. We took off a lot of our plays here today, but we're sticking around in most of our calls into the 14th of June and the 21st of June. Lots and lots of calls. I want to, share with you all of them. I'll do a lot more videos. I just need more supporters before I just go, ripping all these videos out. It takes a lot of time to do these videos. So I appreciate any support. And so let's go check out. We have FOMC right here. So, I put the bottom of this arrow. This is kind of our target area that we highlighted. Do we get into FOMC somewhere around here? We got it next week. It's next Wednesday. So do we go a little bit lower? I don't know. I think this is a good low. And so I'll adjust this and just kind of say, hey, we're getting a higher low right here. And then we start to go for these targets up in this 5, up in the zone here. Okay. So I just want to make a good traditional technical analysis point of view for you guys. And then we can go over to more of the Fibonacci's and the time relationships. We had all of these going here, so I can erase these now. We already proved that they were nice and special, and they helped us see the bottom. Now we had the 6-3. We have a little time relationship here today, and so we got a reversal today. So, again, this isn't a very significant one, but it got a reversal on price action. So we'll see where we go from here. Now on the lower time frames, we have this nice kind of bundle of time relationships on 6-5. So we want to pay attention here. And, maybe that's where we get another high. Maybe that's where we get another low. We don't know where price is going to be. It's not a relationship that tells us direction. But when we get into Wednesday, the 5th, that's when we're going to be looking for wherever price is. If price is up here at the 543 already, maybe it's only here at 532. I don't know. So on Wednesday, wherever price is from here, we'll be looking for some sort of price action to happen, maybe some sort of reversal. So maybe we go up into Wednesday and then we start to reverse. So this looks pretty significant on this time frame where we get something to happen on Wednesday. Okay, and then we'll continue to look at these little bundles of things. We're really keen in on FOMC. We have a couple time relationships there as well. So but our next one is Wednesday. So we'll see what we do into Wednesday. Maybe we set up, maybe we're doing an inverse head and shoulder, left shoulder, right shoulder, and we start to get into these positions, and maybe this is a breakout onto Wednesday. We'll see. Ultimate target on this time frame is 543. That's the 162 extension of our last correction. So this is our last correction, and we had our wave 4. This is the extension of that. We already hit our first target at the 127. Now we're looking towards that 543. And since we're bullish on the market, we're really keying into individual stocks at this time. And I know Tesla looking a little grim today, but we'll see where that ends up. We have plenty. Boeing is working really well. PayPal, Snow. There's all these individual names that we're looking into. So let's go ahead and go over to TLT, and I'll give you a little synopsis on that. Oh, you know what? First, we should kind of look deep into here, and this is the white line here is the former all-time high. So we're kind of oscillating around the former all-time highs, and let's see if we can get back above that here. But after this correction, we had an impulse move up. So let's measure this move where it's retracing and see if it's just your typical wave 2 retracement. Where is it coming into? Perfectly in the 62% retracement. That's why we're getting this nice candle. So, to be honest, I think, maybe we have this 1-2 setup right here. That's what this is. A 1-2 setup is our impulse move. We get a 62% retracement. This golden zone here, 50, 60, 80% retracement. We're already getting a candle off of there, a doji candle. So now maybe we kind of triangulate, when you get a correction, what happens is you get this equilibrium. You get lower highs at this point, but then we're getting higher lows. So maybe that's where we get our equilibrium into tomorrow. Maybe tomorrow's an inside day into Wednesday into this time frame. So we're setting up right now what appears to me as some sort of inverse head and shoulder. And this might be the low right here. It's a good possibility. That's a fantastic setup for SPY. So I think in just a second here, I'm going to add on some SPY calls here, because this would be a 1, 2, and then, you know, there's going to be smaller 1, 2, 1, 2s, but we're looking for a wave 3 ultimately to progress this move here. And that should make easily new highs into some sort of move up here. There's a 150 extension here too. So maybe we get up here and start a wave 4. So 1, 2, 3, 4 into FOMC, maybe a 5 after that, and then head into some sort of correction from there. VIX had a nice little pullback, and that's what gave that big move into Friday. But now we're making a lower high. We're rejecting off of the 200. So this looks like a good spot here where VIX is getting rejected and the market can continue. As the VIX goes down, the market should continue to move higher. That's all I want to show there. Now let's go TLT. I haven't mapped TLT out in a long time, so let's see what we got going here. Let's start off with the monthly. And we'll kind of zoom through this as fast as possible. We kind of have this on TLT. It came out, looks like about 2002. We have this channel that it has been in, had a fake break out of this channel, broke down from the channel. Now, this looks like a 5-wave move down, an impulse that could easily be an A, B, C, or this just flat out could be an impulse wave 1 to where we get to lower prices, okay? And that would mean that over time, the rates would move much higher. I'm not sure that that's the situation. I just really want to say that, you know, over time, it's just typical that rates go down to nearly zero. And so this is a fabulous time. I want to stress that this is a fabulous time to get into bonds, U.S. bonds. TLT is a good way to do it. You can trade the futures, ZB, ZN. There's all sorts of them. I think bonds is a good spot here and at a good spot. And while you wait, if things go sideways for quite some time, you're getting a 4% yield. This is fantastic. I have been buying bonds for a few months now. I have that on my Patreon. I will be buying more. I think the setup is clear that bonds want to go higher, even if it's just a retracement. But ultimately, I think we get back to higher levels in the bonds where rates are low. Rates are going to have to go low. If we get into a recessionary period, the Fed is going to have to lower rates because the market will force it to. All right. I don't think the Fed controls the market. I think the market controls the Fed. I have said that in the past. And what we're doing now, I think we're making a higher low. Again, I think we have some sort of, just like the market on that lower time frame that I was talking about. And I think this is a left shoulder, head, right shoulder, and price starts to move higher. I think this is a 1-2 setup going into much higher prices. And at first, the market, I know there's a lot of commentary on this, and then we'll zoom to the lower time frames. At first, the market's going to say lower rates. Oh my gosh, this is fantastic. And then the Fed is going to pivot, and the market eventually is going to realize that higher rates or lower rates, that something's wrong underneath the hood in the economy. So that's what I'm looking at to happen, where we will probably make those new highs in the market that I was talking about off of lower rates and the market cheering. And then I think things change dramatically after the realization that there's something wrong, that the economy is coming to a halt. Okay, here's the weekly time frame. Again, not a whole bunch drawn on here. I'm not going to dwell on these, but we're looking at something going on. Looks like that's our highest point. That's how we draw trend lines. From a point here, we get our highest point before we made a new low, and we formed a wedge with and the reason why I know that this wedge here, and look, we're getting a move on TLT already. So we have our wedge forming. Well, it's because we have bullish divergence, and so that matches the wedge bottom there. It's very typical when you have these divergences with a lower price and a higher high in the indicators. It's very typical for that to match the wedge that we're breaking up. It had a breakout from this wedge, and now back testing. And now on the lower time frames, we can go to the daily. This is how I do it. I make it much more neat for the eye to see. I don't zoom through it like this unless I'm just rushing to see if there's a setup. But just notice that here's a better look at the inverse head and shoulder. Let's see if we can draw a straight line from. So this should be the neckline. Right about there, we can do that. And so we're not quite to the neckline, but I think for certain we'll at least test the neckline, and we'll see where we go from there. That will create higher highs on the TLT. And then you can really kind of look at it. Some people will have it as a triangle. Again, we're getting a reversal here, so price is at an equilibrium, and really it looks like it's just going sideways for a while, and then it has to break out or break down from that point. That's how we visually, traditionally look at things. All right, so on an Elliott wave standpoint, well, since we're on this daily time frame, from the low here, I like to see what kind of retracement we got, 50, 60, or even all the way up to 80% retracement. So from the bottom to the top, we have retraced right here on the 62% retracement. Price is holding that area. On the weekly time frame, it's going to look different. It's going to have some sort of doji on this 62% retracement. So don't think it has to come right to it like it did on SPY today and reverse off of that. It came down below. It's trading around it. It's a very important area. You can consider this a zone. Some people say the golden pocket's from the 62 down to 786. I think it's more of the 50 to 60, and then it's still valid in the 786. All right, so we're getting above here now on the lower time frame. So you saw that it's at 62% retracement here. Let's kind of clean it up just a bit. Take out all the ones we don't really need at this point. And now let's do the smaller time frame. I know we don't need that 786 either. Now on the lower time frame, I'm not going to change boards. We have this fractal 1-2 setup as well. So this is a 1-2-1-2 setup. And let's go from the top to bottom here. And once again, we're nailing it right at that golden zone. The golden zone for the lower time frame matches exactly on the higher time frame, and we're getting a push off of it now. Now on the daily time frame, we also have this flag type formation as well. So within this like triangle, we're setting up a 1-2-1-2 setup, and we have like basically a flag formation right here, a channel that we're looking to break out here pretty soon here. If I adjust it a little bit, it looks like we'll probably get to that point. So you see what's happening. FOMC could really launch this if we get up here. Maybe FOMC spikes the TLT, but I think it's a buy here. Even though we're late on the actual positions, I think this is a long-term I think this goes in the IRA, 4% yield. That's fantastic for bonds. You can't beat it. And the appreciation on it, or if it wants to move sideways for a while, you can accumulate it and collect the 4% yield. If we break out, then great. I'm not going to hold a bunch of bonds as price goes much higher. If we start to get to these 150 areas, I'm not going to hold bonds anymore. The yield will be probably half as much as it is, and then the risk reward at that point of going higher is not very good. So this is just a win-win situation where you have a juicy yield while you wait, and then a potential move and appreciation. Doesn't get much better than that, you guys. Huge setup. I'm glad we had the shout out for TLT. I'll do much more of these if you want to put out some names. I do need to see some supporters. So love it. Love all the interaction, you guys. Have a wonderful day. We'll talk to you soon.